Hello. Today we have with us Mr. Rahul Roy Chowdhury, CEO, Geojit Private Wealth Services. Welcome to Geojit Spotlight.
Thank you, Jyoti.
I'm looking forward to having an interesting conversation with you on private wealth management in India. So let's begin with the basics. What is wealth management and how important is wealth management?
So I think this is the most critical question because in India still people think wealth management is only for the ultra rich, right? But wealth management as a concept is for everyone. Somebody who has 10,000 rupees to save to somebody who has 10,000 crores to save. Everyone requires a way where they should make their money grow, right? By investing in the right asset class basis their risk profile. Now, slowly, steadily, with all the digital platforms that have come up in the country, wealth management or investing has become accessible to everyone. But till date, we believe that Tier 1, Tier 2 is where majorly people are getting managed properly. Tier 3, Tier 4, or even if you go deeper down as far as the cities are concerned, this is still a gap as far as the country is concerned. I would urge that anyone who is looking at any kind of investment as far as financial assets is concerned should look at a professional wealth manager who can help him or her guide as far as how the monetary benefits can be attained by investing in the right asset class.
Well, wealth management and asset management are often used interchangeably. Is there a distinction? If so, how is wealth management different from asset management?
Wealth management uses asset managers in order to plan investments. So asset managers are nothing but they are people who are managing funds in a way that they have a particular mandate to manage. So if you look at our own PMSs, the way every PMS has a particular mandate as to what and how the money will be invested. In the same way, there are multiple asset managers in the country and they have multiple funds who have different mandates. As a wealth manager, our job is to figure out that if a client is there and basis his or her risk profile, which is the right product from the asset manager which will suit the overall investment profile. So that's the key difference. Wealth manager can work with multiple asset managers in order to derive the right strategy for the client. However, as an asset manager, your product has a particular mandate and your investment style or the product mandate has to be fulfilled. So that's the key difference between both of them.
So can you tell us what the client can achieve through using wealth services?
So it's the financial goals, Jyoti, which a client wants to achieve. See, there are two set of clients. One is who is earning on a regular basis, people like yourself, me, who are salaried, who are getting monthly salaries, and somebody who is maybe a businessman who is somebody who has inherited a lot of wealth and is sitting on that wealth, right? Now, in both the cases, there is a goal for that money. Right. For in our cases where we are salaried, our children's education, our retirement, their marriage, or any holiday, those are the goals by which we work on a day-to-day basis and we save on a day-to-day basis. When your goals are short, say some goals might be 6 months or 1 year down the line, and some goals might be say 20 years down the line. Typically a retirement plan which can be a 20-30 year down the line story. Basis any kind of goal, any kind of requirement for capital, how you manage that capital today in order for it to grow and be available to you for usage at that particular point of time is basically wealth management, right? And somebody who already has wealth, right? Now, say there's a client who has 10 crore rupees in his bank account or anywhere where he's keeping the money. Now, for him, ensuring that the capital does not erode and it grows at a particular rate which is maybe 1 or 2% more than inflation is of paramount importance because the wealth is already created. He needs to protect the wealth and at the same time ensure that the wealth is available for him and his family to use at a given point of time.
Coming to Geojit, could you tell us about the services provided by Geojit's private wealth team?
Good point. So See, as a private wealth management, especially when I'm talking from a Geojit standpoint, we run a complete open architecture as far as the product line is concerned. Client centricity is of utmost importance, and I will help you understand how we do it. The first point, when I said open-ended and an open architecture, I mean that at any point of time, if I have to provide a solution to a client for his or her capital requirement, I can scout all the products that are available in the country. So I don't get restricted that I will sell or advise only products which are manufactured by Geojit. I will advise products which are manufactured by leading fund houses across the country, and across products, whichever product can fulfill the client's requirement and is in line with the risk profile of the client is what we advise the client to buy or sell, right? Client centricity, when it is kept in mind, what we typically do is we risk profile the client first. So whenever we meet the client for the first time, we would want to understand the client's background. Obviously, age is something that we get to know during the conversation. Then even at the same age, two people can have very different views on the capital, right? I want to say that I have 100 rupees, I want to make it 500 rupees. So I have a high risk, high return kind of a attitude as far as my capital is concerned. However, there might be another client at my age who might say, I have 100 rupees, but I want it to grow at only 8-9%. I don't want extraordinary return, but I also want to ensure that my capital is not eroded. Now, for the same client having two different risk profile, the advice or the product selection will be very, very different. This is now when you have invested. Now, even more critical is to keep analyzing what you have invested in, right? Because something that might be doing extraordinarily well today might not have a great time after 2 to 3 years, right? So reviewing the portfolio, analyzing the portfolio at a regular basis is something of paramount importance, and that is also something that we intend to do. Generally, we would follow a principle of reviewing a portfolio once a quarter or once in 6 months to ensure that whatever goals we had thought at the time of investing, are they still intact? Are there any changes over there? Are there any change in the timeline? And if there is any material change as far as those thought process is concerned, then how we change the allocation as far as the products that are there in a client's portfolio. So, and the most important thing in all this is the person who's doing this. How well trained the people are, how well experienced they are, have they seen multiple cycles as far as the markets are concerned, because that is also very important as to what decision or how a wealth manager will take a decision on behalf of the client. So I generally call this a principle of 3 P's, where I say people who are my team who are going to manage the client directly, product, what kind of products you can offer to a client, and platform, as to what kind of platform we have which can help us analyze the portfolio after the investments are done. A combination of all these 3 P's is something that creates great results from a client's point of view, and that is something that Geojit Private Wealth is doing on a very, very efficient manner.
Okay, so you would say that these are the 3 things that the client needs to look into, right? When
not the client needs to look into, Jyoti, it is a platform needs to have these 3 P's.
okay.
Right, client will look into multiple factors, but these 3 P's will typically ensure that you have got enough and more, I would say, arsenal to provide the right solution to the client. Just to give you an example, say if there is a company X and they only advise one particular product, right? Now, if there are 10 clients, 5 clients might not need that product. But because the company does not have multiple products to offer, they will try to advise that particular product. In which case, there is a alignment mismatch between what the client's expectation is and what the client has actually bought in. Right. So that is where I said that having a holistic length and breadth as far as product offerings is very, very critical as far as wealth is concerned, so that we have solutions for every kind of problem statement and also every kind of risk profile. So that's important. But a great product suite, if it is not coupled with a great wealth manager who understands all those products, who has the experience, then that wealth manager cannot give the right advice to the client. So it's a combination of all of them which creates a great wealth manager or private wealth platform. Then the client will obviously have to evaluate that which platform has a great combination of all these three, and which platform is where he will be more comfortable as far as allocating his capital is concerned.
Okay. So looking at from the client's perspective, now if I am a prospective client, what is it that I should look for in a private wealth solution provider?
Exactly, these three things. The person who has come to meet you, whether the person is knowledgeable, has the experience, understands market, does he himself invest properly, then what are the solutions Geojit Private Wealth has to offer? Are they single product centric? Are they multi-product centric? Are they completely open as far as architecture? And how easy is the platform to deal with? How easily can he transact? How easily can he monitor his portfolio? What are the data points that can come out of the platform which can help him and the wealth manager take a more informed decision? So all those 3-4 things the client will tend to see, and then evaluate basis his needs and go ahead accordingly.
Well, when we started out this conversation, you did mention that the wealth management industry in India is in its nascent stage. So could you tell me about how the wealth management industry has been evolving, changing with the customer's need? Has the approach towards money management been changing over time?
So, Jyoti, we are somewhere in the middle right now as far as wealth management is concerned from an industry standpoint. So, if my memory serves me right, when I joined the industry some 18-20 years back, that time the industry size was some 2 lakh crores. And this is only from a mutual fund standpoint. Today, as we speak, I think very recently we crossed the 50 lakh crore mark. So that's the kind of growth that we have seen in 17-18 years now. Going forward, what is typically is happening is, in 2000, early 2000s, in order to transact, you did not have any digital mediums, right? Internet was not on the phone, platforms were not there. So everything had to be physical. So if you had to go and do an application, you had to fill in forms and go and submit it to multiple offices. There was a hassle involved, right? That is where participation of people doing that was lower. Come 2023-24 now, as we see, there are too many people who have come in as far as platforms are concerned, which help a client to transact easily. Now, also at some point of time, people are realizing that financial assets are liquid in nature, right? Earlier, any young guy or girl in his late 20s, the first decision they will take is, let us buy a house, right? But over a period of time, people have realized that house as a place to stay makes sense. Only as a medium to invest makes sense still, but that can't be the only medium of saving. So that is where if somebody was investing, say, 50,000 a month, right? Now he or she is investing 25,000 in a property and 25,000 into financial assets. Now, does that 50,000 become 1 lakh? Does it become 2 lakh over a period of time? That will be dependent on how the economy grows, right? Now, if India becomes a $5-10 trillion economy, right? Automatically the per capita GDP, which is somewhere around $2,500, $2,600 at this point of time, will move up to $5,000, $6,000. As they say in Hindi, there's a need for roti kapda makan, right? Now, roti kapda makan is needed. After that point of time, it is your expenses that go up, right? Suddenly, because we earn more, doesn't mean we'll start eating more food, right? Or doing something which has necessity is necessity. We will keep working on that necessity. So the per capita, when it goes up, the extra per capita that is going up will all start moving into investments. Now that can be financial institution or wealth management or real estate or gold or any of the asset classes. So I really strongly believe that India is in a cusp where this 50 lakh crore will become 200 lakh crores or 500 lakh crores in the next 15 years, 20 years. So there's a very, very strong future as far as wealth management practice is concerned, as far as the entire country is concerned. Wealth management is for everyone, Jyoti. Everyone. Right from a rickshaw puller to the biggest of industrialists. Everyone requires time, energy in order to manage his or her wealth. Right? It can be small, it can be large, but if it is small, even more important that you manage it well because you need to grow it. If it is large, you have already created that capital. You have to ensure that the capital is intact for your next generation and next to next generation. So yes, you're absolutely right there.
Thank you so much for talking to us.
Thank you, Jyoti, for having me here.